Hello everyone, Larry Lavrancic with a daily report for the Aussie dollar US dollar FX for Ichimoku.co and forextrading.tv. Well, an interesting trading day and an interesting last three trading days where we have a congestion area forming into something of a flag type pattern, and a lot of indecision in this market at the moment. A market that's finding it difficult to trade through the 92.78 level of previous support, and down around this swing low was the occasion that established that support, and we've tested there for three consecutive trading days now, and the price action has been rejected away from that area. It will be a very significant area if we do break out to the downside below there, and may herald substantially lower prices. Although we do have the strong support around 92.21 just below there and the bottom of the cloud, so that may limit any downside move that we see. But if we look at today's candle, it's a black body candle in stark contrast to the white body for the previous day's trading, where the buyers attempted to build some solid upside momentum. They broke out up above the Ichimoku cloud, giving us a bullish market in the long-term time frame. But a lot of that sentiment has changed. We're back to a neutral market in big picture terms, and that creates a lot of indecision in the market. The black body denotes the momentum shifting to the sellers in net terms between the open and the close. The only problem here for the sellers is that they haven't closed with strong control, whereas the previous day the buyers had strong control by closing up towards the high. The sellers have failed to close down towards the lows, and this suggests that 92.78 is an area where there still has been some strong buying coming in, even though we have a black body candle. The buyers, however, did lose some commitment as they tested roughly up around the 94 level, and we have this region, as I've mentioned previously, extending up to about 94.20, 94.09, and just below around the 94 area. And I suggested that this market was bound by close by resistance and also close by support. So what we need to do is wait for resolution of this indecisiveness and this lack of trending action that we're seeing in this market. So here we have this flag type pattern, and it's not quite perfect. These lines aren't exactly parallel, but in the real world we don't always have perfect situations. But more importantly though, we always need the prior trend leading into the pattern. Here we have a very efficient downtrend in the first time frame in place with a series of black body candles. The lack of commitment by the buyers in trading this market up through the top of the cloud, and the lack of follow-through after the breakout above the cloud, does suggest that there is a very real possibility of this breakout to be to the downside. So we should be watching this area, obviously down around the 92.78 support level, for a solid bearish close down below there. The target, if we do see that bearish close down below there, would be the measured move. So it's the extent of the trend leading into the pattern projected down, and that would give us a target down below the bottom of the cloud. Now that's not quite a realistic target. The cloud, and anywhere within the cloud, will act or has potential to act as an area of strong support. So we should be very careful about having a firm idea about whether that target will be reached if that breakout does occur. There is also a possibility of a breakout to the upside, so we should be watching this upper barrier, and when the market is trading up there, we will be coinciding roughly with the 94 area once again, and that very strong resistance overhead. So in terms of Ichimoku, a change of sentiment in the long-term time frame back to the neutral bias, and we had the bullish breakout before, and what we want to see is follow through to confirm that, and we haven't seen that today. We have seen the continuation of the uptrend, but we have seen a black body candle where the buyers, where they had strong control previously, have actually lost control. In terms of the Kijun-sen and Tenkan-sen, the market's trading below the Kijun-sen, the pink line, and below the Tenkan-sen, giving us a bearish market in the medium term and fast term timeframes. And the Chikou span is below the corresponding price action, so it's confirming the bearishness that we're seeing in the shorter timeframes, but not in the longer time frame. This is a market where we need to react to how the market interacts with the established support and resistance levels. It's not really a good market to be trading at the moment. 92.78 is strong support, and anywhere down through to the bottom of the cloud around the 91.87 level may act as support, and the area above with the Tenkan Sen trading just above that 94 region establishes that as a very strong area of resistance as well. So I think we need to be patient and wait for resolution of this market outside of these strong areas of support and resistance.